high leverage does not work in a down market.
Mhm.
And I don't know if we're going to have a down or just a slight down or a massive crash. I mean, nobody really knows. There's very different factors this time around.
Yep.
The loans that have been made have been good. The interest rates are low. The equity is high. The LTVs are low. The job market is stronger. There's a lot of positives that weren't there 10 years ago. There's not overbuilding. There's the opposite of that, except in the high end. So will there be a massive housing crash? I don't think so, unless there's a massive stock market crash. And if a stock market crash creates a whole lot of job loss, then we would see some foreclosures, which are on the rise.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Hey, welcome back, Pillars of Wealth Creation listeners. I'm your host, Todd Dexheimer. With me, I'm excited to have Kathy Fettke. Kathy, how are you doing today?
I'm doing great. How are you?
I am doing fantastic. So, Kathy, can you give our listeners a little bit kind of about what your background is and then what you've got going on today?
Sure. Well, I am the co-CEO of Real Wealth Network. We have 40,000 members now. My other co-CEO is my husband, which, boy, I could go on and on about how to work with your spouse and stay married, happily married. So let's see, 15 years ago or so, he was at the top of his game, really. He had just come out with a book called Extreme Success. We had just bought a very big house, had 2 little kids. I'd been in the news business for years, but I was a stay-at-home mom. Everything was my dream. It was amazing. And then when he was on the road for months on a book tour, he just came back after being on the road for a while and said, he just looked like he saw a ghost. Basically, he was very, very distraught. I said, what happened? And he had gone to the doctor and checked out some freckles that he somehow noticed. He's a redhead with lots of freckles, but he noticed these ones. And it turned out it was melanoma. And after further testing, the doctor said it looks like it may have spread. And if it did, you've probably got maybe 6 months. So everything was great until it wasn't. And that's a lesson I think needs to be told, because so often people have this dream of, okay, I'm going to be here and then everything will be great. But you know what? Life is full of curveballs. It's really how you respond that matters. So the way we responded was, I was like, you stay home, you live the life that you dream of and spend time with the kids, and I will take over the finances somehow. But I had a radio show at the time in San Francisco on KNEW that was kind of Oprah style, basically just interviewing people I thought were interesting. And I just suddenly switched it to, okay, how do I create passive income? Because if the doctor's right, I don't want to be working all day with my kids. Like, where would they be at daycare being raised by someone else? I'm like, no, I'm not going to do that. So I just shifted gears and made my show, the Real Wealth Show, I have it today, all about how do you create wealth and be at home. And so I interviewed people, found out over time that the people who had made millions had either invested in business or invested in real estate. So I thought, okay, I'm gonna do those things, and that's how Real Wealth Network got started.
Wow. That's yeah, that's quite the story. And obviously I've met your husband well, I think it was last February, and
Yeah,
he's doing fine.
he's doing great. The doctor, I mean, they cut it all out, and he's great. Today he's healthy. He has to go get his skin checked. He still surfs and rock climbs, and he's out in the sun all the time, but he wears sunblock and hats. And but yeah, he's doing great.
That's awesome. Um so tell me, like, uh, explain, I guess, further, what did you do to create that passive wealth? I mean, you
Yeah.
have the Real Wealth Network now. What else? So what are you doing? What's your business look like?
Well, back then, I really knew nothing about wealth creation. I was just one of those people who said, follow your heart and the rest will, you'll figure it out. But I really had to develop this wealth consciousness. That was first and foremost, to understand the thought process of someone who creates wealth easily. And somehow by shifting gears and interviewing people, I started to get invited to events to MC because my show took off. Apparently, I'm not the only person in the world who wants to know how to create passive income. So all of a sudden we had all these listeners, and I started to get invited to speak at events, which I had no business doing because I was brand new. But I started to surround myself with people that were different than what I had grown up with, or my pool of friends. And they say that you are the sum of the 5 people you hang out with most. And so if you're not super happy with your life, maybe add a few more people into your life that have more of what you're trying to create. And so I just started watching and observing, like, how do wealthy people think? And it is so different than average people or normal people. There's just no fear around money, no guilt, no shame, and just no belief that there's a limited supply of it. And so I had to adopt that. I did over time, just adopt that philosophy. And they were so generous too, so happy to just give because of this abundance mentality. That was first and foremost. But then on top of that, just I ended up getting sponsors on the show. That was immediate income that I needed. I built the audience. So I thought, oh boy, here's one way I could make money. I just started selling sponsors. And the biggest sponsor I got was a mortgage broker. I thought, oh, great. Now I have to talk mortgages. I'm going to bore everybody. I'm going to lose my audience. It was the opposite. It's like, okay, how can we make this interesting? And the way we made it interesting is that we started interviewing the people who were borrowing the money, the clients. And these people were borrowing money to buy their first home and fix it and flip it, or do the BRRR, the BRRRR strategy, or just buy and hold. I mean, they were doing all these different things. I was interviewing people in their 30s, even in their 20s, who were already financially independent. At this time I was probably, in my late 30s. And so I'm like, wait, there's something I don't know that I need to understand and learn. And at that time it was leverage. It was this concept that, most people think, oh, I'll never be able to do that because I don't have money. It was when I met a guy who I would say, I'd call my mentor, but I didn't pay him any money or anything. It was just somebody who was willing to share advice. Like I said, wealthy people love to share. And he said, oh, it's when you run out of money that you become a real investor, because you have to learn how to use other people's money, which could be bank money or private money or whatever. So, you that's what I learned on my own show and having this mortgage broker. I mean, it happened to be conventional finance, but back then, man, you could get a loan no matter who you were. You could get unlimited investor loans with no money down. So there was really no excuse to not get in the market. So Rich and I did. We bought that big house. When times got tough because there were so many medical bills, he came home from a rock climbing trip and I had every room rented out. It was like a 6-bedroom house, and there
Who
was
are
a
all
room
these
for
people
him.
in our house?
Oh, he had to wait in line to go to the bathroom. But there was a room for him and me, for us, and a room for our kids they shared, and the rest we rented out. I rented out, and I became a landlord. I did, I think there's a word for it now, house hacking or something. But
Yeah.
that was like, I got these people off Craigslist. I mean, it was crazy. I got a student. I guess there's a student program where you can get 4 students in a room and they pay $600 each if you feed them breakfast. And I mean, the next thing you know, we've got our whole mortgage covered by all these people. But I learned,
Wild.
I learned the business, and I learned about leverage, and that's the key.
So you were doing Airbnb before Airbnb was a thing.
Yeah, when it was real dangerous, bringing
Yeah.
strangers in the house. Yeah.
Oh, funny. So now where's your business evolved to? Kind of give us a little quick snapshot
Oh
of
my
what
goodness.
it is
Well,
today.
it has really evolved. Like I said, we
Mhm.
have 40,000 investors. We, what happened 10 years ago, or like 15 years ago, is I had the Real Wealth Show, and that gave me, I was on a pretty major station in San Francisco. My husband said, "Hey, there's this new thing on this new thing." It was like the iPod back then. It's like, I think it's called a podcast, and we can take your show and make it a podcast. So I was one of the very first people on iTunes as a podcaster. And
Yeah.
suddenly my little San Francisco audience went to international. And
Hmm.
I had people calling me from Australia and China, all over the world, almost immediately, almost overnight. I was sent on a private, not a private plane, but I was a full trip paid to go to Australia. And all of a sudden I'm in front of a room of 1,000 people. So that just opened everything up. But because of this platform that I created, I got to have people like Robert Kiyosaki on the show, big people with far more experience than me. I knew I was new, and I knew that I suddenly had a lot of authority and power being a media person. And that was scary to me. So I wanted people that could really guide me and my audience. I wanted people with 30, 40 years experience who could tell me what to do. And Robert Kiyosaki said, "Hey, and I was in mortgages at that point. Now, once I learned from the sponsor the power of leverage, I'm like, sign me up. I'm going to be a mortgage broker." Um, so I understood the power of leverage, and I also understood that something was very wrong. Like, why could I give it a loan to anybody? I was new, and I thought, I wouldn't do this. I wouldn't give $1 million loan to someone who can't even show me they make any money. A Nina loan, no income, no assets. You don't need to show anything. I'll write you a check for $1 million. Are you kidding? And I knew something was wrong, but I just was new to the business. So I thought, well, maybe this is the way it works. But then Robert Kiyosaki came on my show, and he goes, "No, this isn't the way it works. This is called a bubble. This is called easy money. The bubble's going to pop, and you need to be properly prepared for that." So he said, all you Californians listening to this show, sell now and buy in markets that are not in a bubble. And at the time, Texas was not in a bubble at all, not even close, under bubbles. It was 26% undervalued.
Hmm.
So I jumped on a plane, and I looked around, and I was like, oh my gosh, we can buy brand new houses in the path of progress next to all this new job growth and population growth for like $120,000, brand new.
Wow.
So I knew the power of leverage, and I came home with 5 properties. I did actually call my husband and say, "Is this okay?" But he's like, I don't know. But anyway, we did it. They rented immediately. They stayed rented. We got cash flow, and I talked about it on the show, and suddenly everybody's saying, "Oh, we want your contacts. We want to know who you used, and who's your property manager, and who's your insurance person." And so I just started giving all these referrals. And then I realized, well, maybe I can make money on that. And that's become our business. As a licensed real estate agent, I now refer people who want to, buy property out of state and markets that have high cash flow. We find these teams who have experience, who have property management. We get all the teams set up, and then we refer that to other people who want to invest and just don't have the time to go and create their own team. And we get a referral fee,
Interesting.
so that our members don't have to pay because it's the broker who pays us a referral fee, and that's what we
Okay.
do.
Hmm. Very, very interesting model. I like that a lot because I've I invest out of state as well, and I build up teams, and then I always give away my
Give away
contacts.
for free. You have
Right,
to
right.
do it
I
for
do the
years.
same thing. It's like, oh, here you go. But I
Yeah.
really like that model, so I'll have to think
Look
about how
into
I
it.
can
Yeah. I
incorporate
mean,
that.
you have to be licensed. I'm a licensed agent, so it goes broker to
Sure,
broker.
sure.
But
Are you
yeah,
licensed in the state then? You're licensed in.
no, I'm licensed in California, and this
Mhm.
is really important. A lot of people are doing this illegally, and you need to be cautious because there will be massive fines
Oh, sure,
if people get caught for all these referral fees. There are very, very strict Department of Real Estate rules about paying referral fees, and some states don't allow it at all. So the way it normally works and is legal in most states is that there's a broker in that state, licensed in that state, who can then pay another broker in another state. So my husband's a broker. So I can refer people to a broker in, say, Florida, and then someone buys a property and that broker makes 3%, and then we get paid out of that.
sure,
So it doesn't affect the buyer, which is
sure,
nice.
sure.
Mhm.
No, that makes sense. Well,
Yeah.
that's great. Um, so let's talk a little bit about about the business and how did you build it and how have you continued to make that evolve. So uh, first of all, what advice would you give us to operating and growing a business successfully?
Oh my goodness. So I have learned that there are just very many different personality types out there. I'm a visionary. I'm an entrepreneur, 100%. I am all the good and all the bad that comes with an entrepreneur, which means I can see it. I could see, oh my gosh, what an opportunity to sell California real estate when it's bubbled, at the peak, and exchange it for a market that is at the bottom, at the beginning of its growth market. So you get to sell at the top, exchange one property for, in some cases, 10,
Right.
and quintuple your cash flow, and then watch the values rise as well. So it's like, oh, I could see this opportunity. And then I jumped on the opportunity, and then I told people about the opportunity, and then our phones were blowing up, and then I'm like, so a true entrepreneur knows how to make huge messes. Huge, it's the rainmaker, and then someone's got to collect the rain. so
Yeah.
so my husband jumped in. That's how he became the co-CEO. Like, okay, we need to systematize all of this. He created the website. He helped me create videos. He's, like I said, the one who got my radio show into the podcast. He started reading all the books on how to build a business. When we hired our first employee, it was terrifying. It's like, oh, what do you have them do? And so the first step, I believe now, in looking back at many of the mistakes that we made and the wrong people we hired and all of that, is to create an org chart. Most
Hmm.
businesses, even multi-million dollar businesses, sometimes don't have an org chart. And that org chart should be extremely specific. You can go online anywhere and just look up org chart and kind of see how other companies do it. And then you just create, sorry, my phone. You just, put, who's the CEO, who's the COO, who's the marketing director, the director of product. And maybe it's you. Maybe your name is on every single job. And that's usually how it is when you start out. So
Right.
then you kind of look at that and say, okay, what's the thing I'm worst at, that I hate doing and I'm just not good at? And if that's a position that's more affordable, like bookkeeping, for example, usually entrepreneurs are terrible at that. So our first hire was a bookkeeper, and we brought her a box and we're like, just make sense of this. And that was like the first step. Oh, okay. What's the next thing I'm not great at? Putting on events. I'm not good at the detail. Okay, let's get someone. What I learned is that you don't want to just get anybody. You need to get a specialist. The mistakes we would make is we would just hire someone off Craigslist and be like, okay, put on the event, and they didn't have any experience. So we learned over time, get a bookkeeper who specializes in bookkeeping.
Yeah.
Get an event planner who does that and loves it. Get a social media person who understands social media. Don't just get a receptionist or an office manager and think they're just going to figure it all out. So that was a big one. Get specialists. And you can do it on Upwork, and there's lots of websites where you can just hire someone for a few hours. Maybe you want a PowerPoint, and so you hire this office manager, and they don't know anything about PowerPoints. But you could have that office manager go on Upwork, and for $50 find somebody who can make you a great PowerPoint. You don't have to hire a full-time employee.
No, that's great points, because I think a lot of people do that too, is that they hire a bookkeeper and they go, oh, I've got this and this and this you can do too. And they start throwing stuff at the bookkeeper and then wonder why the bookkeeper's not doing that great on the books and not doing great at the other stuff too.
Right. It doesn't set anyone up to win. Yeah.
Right. It sets them up for failure. Yeah, for sure.
So if you can get somebody, what I kind of just got lucky with is I found somebody. I did the wrong thing. I hired this girl right out of college because she was cheap, and she ended up being amazing. And what she was amazing at was figuring out what we needed. So she would say, oh yeah, I don't know anything about PowerPoints, but I do know about Upwork. Hey, look, you can get this person for, $50. And so she just kind of knew how to organize me.
Yeah.
And so that if you have a good assistant who can find the resources you need, but don't expect them to know everything, because they can't. Usually.
That's what I need. I need that person to come into my business, because I think I can do like everything, right? So I've made a PowerPoint the other day and it was terrible. My wife's really good at PowerPoints, but she still works a full-time job. Hey, check out my PowerPoint. She's like, this is terrible. So she took like 45 minutes out of her time and fixed my PowerPoint. And then just says, here, how do you like this? And I'm like, holy cow, that's amazing. Like,
so good. Yeah. I'll tell you what, there are good people. There are good people out there that are not expensive.
Yeah.
And you'd be shocked, but I know what you mean. You need that person to just coordinate it all. So, for a super creative entrepreneur, you need the opposite person. And that can be challenging because entrepreneurs tend to move quickly and overwhelm their staff. So if you get someone too opposite, they'll be overwhelmed by you. So they need to be able to keep up with your pace. And if they can't, like for example, a bookkeeper might be real slow and methodical and just can't handle the entrepreneur's intense energy. So sometimes you need that middle person, that executive assistant who can coordinate, like the crazy entrepreneur with the people who can get the job done. Because believe me, the entrepreneur will drive everyone crazy.
Yeah, no, that's for sure. Especially that you're that entrepreneur. It sounds like that would drive people crazy because you
all the time, and
you're that visionary.
Because I'll say, oh my gosh, okay. An example is I'm going to be in Dallas in 2 weeks. Hey, let's have an event. I know I have people who would love to meet, and go do that. And then they're going, do you realize that means, we got to send out an email. We got to set up like there's all these things that we need to do for this little idea you think is so great, which is great. The idea is great, but it's all the steps to it. Yeah. So there are forms that an entrepreneur can fill out that basically break that down. So that you can literally go, okay, I want to do this event, but the form says, okay, what might this cost? What are the steps? What do you need? And then as the entrepreneur is filling it out, maybe the assistant's filling it out for them, they can go, oh yeah, there is a lot to this. Maybe it's not worth it. Or, it is still worth it. It's going to cost this much money, but it's still worth it. Do it.
Yeah. Oh, that's great. That's great.
Yeah.
Somebody to help control the spasms that you have as an entrepreneur.
Yeah. Well, and we think it's so easy because we're not the implementers.
You're right. Yeah. I agree. And we expect, like, we don't see the whole picture. It's just like, hey, let's just do it. This is
just do it. What's so hard about that? Put on an event in Dallas, where, when,
Well, I don't know. Figure it out.
Right.
Funny. Hey, I want to interrupt this episode real quick to talk to you about Nate Armstrong, our sponsor, Nate Armstrong. He's with homeinvest.com, and you want to get to know Nate. So go to homeinvest.com and just connect with Nate, talk to him, learn about his operation, what he's got going on. He's a turnkey provider, and it may not be right for you, but it could be the perfect fit. So it doesn't hurt. It's a free call, consultation just to figure out, what they do, what they have to offer. And worst case is you're going to meet a great person who's really well educated in real estate. He's done a ton of different real estate strategies, and probably is going to teach you a little bit, even on a short conversation with him. So go to homeinvest.com and connect with Nate's company. You're definitely not going to be disappointed. It's worth it. So thanks, and we'll get back to our show. So what, I'm sure you've never made any mistakes, but if you did make a mistake, what's something you've done, and how did you learn and grow from it?
I could write a book on mistakes. I probably will. I would say the very first mistake I made was bringing in a partner instead of an employee. And this happens a lot. A lot of times that entrepreneur is like, I want to do this, but they just are totally ADD and they just can't implement. It's like that. I literally had my brain scan to understand it, because I know it's unique. And it was very funny that I had taken a fall. I surf a lot. So anyway, I wanted to make sure my brain was okay. But in the process, they said, oh, you're an entrepreneur, aren't you? And I'm like, yeah. They said, oh, well, let me explain. This part of your brain works overdrive. This part, and there's terms for it, I don't remember, doesn't work at all. I'm like, okay, what's the difference? They're like, well, this part can see the opportunity, really see the problem, and then see what's needed. Like, oh, there's a storm coming. Oh my gosh, everybody see that storm? What do we do? Oh, I know, let's build a shelter. And then, oh my gosh, we just built a shelter. Hey, I'm charging $5 per person who wants to use. So it's like, we could see all that, but the part that doesn't tend to work is the implementer, the what he called an assistant. So an entrepreneur must have a good assistant. It's a requirement, because that part of your brain literally might not be working. So when my business took off and my husband had his own business and he wasn't my co-CEO, I just found some guy who would look like he had a business degree and was kind of doing what I was doing. And I let him be my 50-50 partner. Didn't charge him any money. I just needed help. And I was overwhelmed. And he ended up it turns out he was an entrepreneur too. So it was like two entrepreneurs just driving each other crazy, not an implementer. Yeah. And then I had to get myself out of it. So like, okay, I've just given him 50% of my company. Now I have to give him 50% to get out, and he didn't put anything in, So it was very difficult. I worked my way through that. But then I learned, you can just hire people. You don't have to partner. And when you hire, if you don't have a lot of money, which we didn't, to pay someone a lot of money, then you can offer profit sharing. You can offer sort of positions where, as the company does well, they get a percentage, but you don't have to give ownership and control away. That's key. So that'd be number one. Number two would be trusting the wrong people. What I've learned, especially in real estate, is that there's a lot of people that don't deserve your trust. There's a lot of sharks out there. I've met probably all of them. Now I can spot them a mile away. But in the beginning, if somebody looked me in the eye and made a promise and shook my hand, I thought, that's good. So a lot of people don't realize it's not good. And everything needs to be in writing. Any agreement needs to be on paper. It's amazing how quickly people can forget their agreement. I'm telling you, just trust but verify.
Yeah, I couldn't agree more with that. I am in the same boat. I've been burned so many times by just trusting people, because I like to see the good in everybody.
Most people do, but there are people who take advantage of that, and there's unfortunately a lot of them in the investing world. They're everywhere.
And I think it's easy if you're an honest person to just get caught by that because
Yeah.
you're going, I would never do that. Why would
Why
somebody
would
do
you do
that?
that?
Yeah.
I
Why would somebody, and you don't even think of like some of the possibilities. Cause like, that's not how, at least for me, that's not how my brain
it's
operates. Like, I don't,
not even in your mindset. And it's
yeah,
also so dumb. I mean, if
right.
there's legitimate ways to make money in real estate, but if you do it not legitimately, you'll be out of business very quickly. So
Yep.
I just don't understand why people do it, but they do.
But it happens and
Yeah,
you've got
it
to be
happens.
aware
And then
of that.
sometimes they're just incompetent too.
Yeah.
So, in some cases, it's not that they're lying. They just, what new investors don't know to do is to understand. They think if someone's one step ahead, that's far enough.
Mm.
It's not. You need to make sure that you're getting your advice or partnering with people who have experience or have a track record. The biggest mistakes I've made is, again, thinking, oh, this guy did a deal successfully and I've never done that kind of thing. He must know what he's doing, and
Mm.
maybe he just got lucky on that one deal. So
Yeah.
now I've got thousands of people who rely on me for their retirement, and the only people, if we're going to do a development or a flip or a private lending or anything, any partner of mine is going to have 30 years minimum experience because there's too
Mm.
much weight on me. If there's somebody new to the game, they can bring us deals, but there has to be someone on the team who's older and wiser. Just, you got to have that mentor, especially now. We are at the tail end of a massive boom. And most people today are where they are at every stage of a cycle. Every time we get to this stage in a cycle, it's when everyone jumps in and everyone thinks they're amazing and can do no wrong, because for the last 10 years they could really do no wrong. I mean, it was a booming market. Now, as that slows down, they're going to be in for some surprises. So you don't want to partner or put your money and trust your money with someone who's only been in for the last 10 years, unless they have a partner who's got more experience and in a down market.
Sure, sure. Yeah, I was actually just talking about that the other day of where we're at and how a lot of people just they just they've gotten so lucky for all these years and they think they're super smart.
They think they're super smart, and they
And
might be.
they
It's just,
might be.
mhm.
Yeah, yeah.
It's just that what worked over the last 10 years won't work in the next 10 years.
Right.
So you just, if you've been through the downturn, you know exactly what I'm talking about. High leverage does not work in a down market. And
Hmm.
I don't know if we're going to have a down or just a slight down or a massive crash. I mean, nobody really knows. There's very different factors this time around.
Yeah.
The loans that have been made have been good. The interest rates are low. The equity is high. The LTVs are low. The job market is stronger. There's a lot of positives that weren't there 10 years ago. There's not overbuilding. There's the opposite of that, except in the high end. So will there be a massive housing crash? I don't think so, unless there's a massive stock market crash. And
Mhm.
if a stock market crash creates a whole lot of job loss, then we would see some foreclosures, which are on the rise.
Yep. Yep. Yeah, and those people that are leveraging way above are going to get stuck.
There are people who are highly leveraging apartments. Oh my gosh, it's going to be a bloodbath.
Yeah. Yeah, I agree.
It's scary. Yeah, I think there's going to be huge opportunity in multifamily in a couple of years. I hate to
I,
say it.
I hope so.
Yeah, I
I
think
don't want to see anybody get hurt because I have a lot of friends in the multifamily space. And
there's a lot of newbies jumping in who think they're pros and don't know a down market. They're going to be in for a surprise.
yeah, I agree. I agree.
Mm.
Well, cool. What are some essential people that have kind of helped you and how, maybe you don't even have to name the person, but how did they help you through and get you there? And what would you say to somebody who's kind of getting started in speaking to that aspect of it?
Sure. I mean, a lot of what I've created has just been trial and error. So, but I have had a lot of, well, we had a developer come to me about in 2010, might have been 2009, right when everything was falling apart. And he has 40 years experience, amazing track record. And he was able to get all of these highly distressed subdivisions and properties from the banks for 10 cents on the dollar. And he came to me and said, hey, we could get this subdivision it's waterfront properties in Portland, right, riverfront, right in the coolest part of town, for $3 million, and the loan alone is $13 million. He said, do you think you can raise $3 million? And I'm like, wow, I don't know. We've only been referring people to, our teams in different markets to buy single family homes. So I don't know. So I kind of checked, and it turns out we were able to raise the money in a matter of hours. So from this man, we were able to raise the money, acquire the property, finish it out. It was 70% complete before it went into foreclosure, and investors made a 25% return annualized during the worst part of the recession. So I was like, okay, this is somebody I need as a mentor. So we've been doing deals ever since. And just amazing deals. Some where investors have made 30, even 40% IRR from. So what I've learned from him is buy right, 100%. Like, you've got to buy right, buy at a discount, and it's okay to wait, and it's okay to turn down deals till you find that right one. He's very picky. He'll get 100 deals on his desk and only one or two that he'll even look at. So, to be picky. And then, because of his experience, every single downturn for the past 40 years, the banks come to him to sell off these distressed assets. He knows that the reason he gets those distressed assets at 10 cents on the dollar is because the person who once owned them was too highly leveraged. So he won't over leverage, and definitely not on development. Now we're buying dirt and we're entitling it and getting permits and building. You don't want loans on land, because you're not getting any income, and it's just an expense. Right. You don't know how long it will go. So when we do our land and development deals, we are raising enough money to buy the land cash, get it entitled, all cash, and then build maybe 5 properties at a time, and all the profits go into building the next 5, so that we're not using bank leverage as we move into an uncertain time. That way, if we have to slow down sales a little bit, no big deal. We don't have a loan that, breathing down our neck.
Yeah, and I think that's really valuable, because if you look at every cycle, like you said, that's where people get burned, is when they have those loans, especially on a development, especially because there's no cash flow, and you can't have cash flow. I mean, it's just not going to work especially when, I don't know what price range you're building houses, but typically it's let's call it a $400,000 house that could rent, if you could rent for $2,000 a month. Well, that doesn't work, and the type of loan you have set up just doesn't work for that either.
Yeah, we bought actually 800 acres in Costa Rica, right next to the fastest growing city there, San Isidro, where there's a new airport coming in. A New York developer came to us and said, I just really want to raise my family in paradise, and I found this land and I want to build a whole community there. And so we bought the land for like $3 or $4 million or something, and bought it all cash. And now we're in the process of building homes. Again, we raised the money all cash, so we don't have bank loans. But it wasn't a ton of money for what we got. And but still, even so, he just didn't like having this land that wasn't producing income. So one of the first things he did when he got the entitlements, which he got very quickly, was put up like 100 really, it's called glamping, like really fancy tents. Tents that have, really nice, comfortable beds in them with 1,000 count sheets or whatever, and air conditioning. And it's, beautiful tents. So you feel like you're camping, but you're glamping. And he just started the resort. He's building a resort there, an eco resort. But he's like, hey, why wait 2 years for the hotel to get built? Let's just get it going. And it's so awesome. People are doing yoga retreats there, and we're generating income while building out the resort and the residential community. So it's really cool. There's all kinds of ways to protect yourself when, and like I said, in an uncertain time where we know, don't fall for headlines.
Yeah.
We know every 10 years that there's going to be a correction. There
Yeah.
always is.
Yeah.
Think there's not, then you could be in for a surprise. So, it doesn't mean stop playing. It just means be very cautious and make sure that you could withstand lower rents. I see people come to me with pro formas on apartments that only are calculating rental increases. It's like, okay, well, what happens if that doesn't happen? What if you have to decrease rents? Are your numbers still going to work out? Oh, not at all. Okay, well, that's a possibility.
Yeah.
You need to have, best and worst case scenario in your performance.
Yeah, that's something I've been talking about lately as well, because people say, and I hear it all the time, well, rents don't go down. Historically,
Really?
rents don't go down. And that might be kind of true, right? Because
It's
when you
not
look
true.
at, when you look at statistics, you can see, okay, rents have basically stayed stable. But here's what people forget is that maybe the rent stayed at $800 a month, but your economic collections go down to 700 or whatever it is.
Yeah.
Because now you got tenants that move out. So now your vacancy rate goes from 5% to 15%.
Right.
And then you got to offer concessions. And so you're giving $500
Yep.
or even more away in concessions. And so, yeah, great. You can still get $800 a month, but you're giving 2 free months of rent and you got 15% vacancy.
Absolutely. Yeah. It's like I said, and I get people saying, they're buying these C-class properties because you just can't build them. The replacement cost is too high, and so the values could never go down, or the rents, and there'll always be people who can't afford the higher income areas, so there'll always be a demand for C-class. It's like, when that recession hits, depending on how hard it hits, you've got the C-class people going, oh, wait, I can move into a B-class neighborhood. It's the same price,
Mm-hmm.
And then you got the A-class people saying, oh, I can't afford this anymore. I think I'll move into B-class. So B-class gets the action. And C-class is like, all of a sudden people have an opportunity to, or people lose their jobs and they move in with mom who might be in the B-class apartment, So
well, the C-class may have the demand, but can they pay?
can they pay?
Can they pay their bills?
Yeah,
It's
I
all
was
about
just
being able to pay your bills.
it's all about that. I was just at a multifamily mastermind, and this man I talked to who's been doing this a long time said, oh yeah, back I won't buy C-class again, because when I did, and it was in the Dallas area, and everybody's buying these now for paying top dollar and low cap rates for these C-class properties, and he said, oh yeah, I got down to 50% vacancy, and the other 50% weren't paying. So he's like, it was tough.
Wow. Yeah. Yeah, we don't want that.
You got to be cautious.
You're not going to cash flow like that. Oh, funny. So are you doing, you're doing some development stuff. They're not leveraging. Are you doing any rentals? And if so, what are you doing to protect yourself for that?
Oh my gosh, yeah, we sure are. We're still buying rental properties that makes sense. So
What kind of rental? Are you buying multifamily? Are you buying single family, or maybe
um,
both?
we have been so focused on single family simply because the returns were so high,
Yeah.
and a lot of our members are from California, where maybe they have one or two rentals that don't give them anything, except for
Sure.
they've made a bunch of money. So they might have bought a condo for $300,000 or $400,000 in the downturn, and now it's worth $1 million, but they're still getting $2,000 or $3,000 rent. So, but they're not really they're not ready for apartment, to buy an apartment. They just kind of want a few more single families. So we show them, hey, there's areas where you can do what we did 10 years ago, sell that California property at the peak and buy in this area that hasn't, peaked yet, or is maybe just at the beginning of its boom. In single family. I mean, yes, we do offer multifamily property to those who want it, but most of our members just aren't. They just want totally passive. So if they were going to do an apartment, they want someone else to do it all for them. They'd want a partner, or they'd want to invest in syndication or something like that. These are people who live in the Silicon Valley and work 80-hour work weeks, or, our directors in Hollywood who just, they don't have time to manage anything.
Yeah.
So we try to get it all set up with the teams in place so that it's fairly easy for them. And some of the markets that we're directing them to would be in Florida, Texas. These are the two highest migration states where prices are still fairly low. Cash flows are not as good as they used to be, but they're better than California. So you could sell that one California property and buy five or 10. We really like some of the up and coming areas where we're seeing a lot of revitalization, like Detroit and Cleveland and Pittsburgh and Cincinnati. I mean, not the hottest markets for vacation, so to speak, but there is growth there, and yet you can still get prices for so low. And those markets, depending on where you buy, you got to be very careful, very specialized. You need a local expert to help you.
Yeah.
You can still, with leverage, you can still get 9, 10, even 11, maybe 12% return.
Yeah. Yeah. Oh, good point about that's one thing I would caution people as they listen to you and they go, man, I want to do that. I'm not going to contact Kathy though. I can just do it on my own. Is I invest in Cincinnati, and it's a great market.
Yeah.
But Cincinnati, along with most cities in the U.S., are very different on this part of Cincinnati versus that part of Cincinnati. So you can go to the east side versus the west side. It's totally different market. And even on, like, let's call the west side, you can go to a certain neighborhood in the west side versus another neighborhood. It's completely different. So you've got to, as you said, have local experts that really truly understand what they're doing.
Absolutely. Yeah. You and have your best interests in mind. I mean, that's one of the benefits of buying through our network, is that we have really weeded down our list of providers to people that we have a long track record with. They have proven themselves over and over again. And with that said, anything can happen. So we're not brokers in those areas, so we can't be involved in the transactions. So investors still need to get their inspection reports and make sure the work was truly done to our standards. Get the appraisal to make sure it really is appraising, and look up the rental comps. You still need to do your part. We had one really amazing provider in Cleveland. He owned like 80 homes himself, so he was just kind of doing it for fun. He was giving investors way too good of deals. He was barely making any money. He'd buy, fix. He had everything in place, and so he would just do it. But then in like a matter of 1 month, he had all these terrible things happen. His wife got cancer, his cousin was shot, and so like something happened to his child. I mean, there's all these things, and he just lost focus. So we put this contractor in place to sort of run things, and that contractor was just taking people's money and pocketing it and saying he did the renovation but didn't do it. But our guy we trusted wasn't paying attention because he was distracted, obviously. Now, you might say, whose fault was that? Was it Kathy Fettke's fault for referring to this guy? Was it Real Wealth Network's fault? Was it his fault? You can blame it on whoever you want, but at the end of the day, it's the investor's fault. It's your money. If someone rips you off, they ripped you off. If you paid for a renovation that didn't get done, then either you paid for it before it got done. That's a no-no. Never pay a contractor before the work is done. Don't pay anyone before the work is done.
Yep.
And you didn't maybe have it inspected, or you were just lazy. So you've got to make sure that you're not. We do have a checklist at Real Wealth Network. You can go to once you join. You can there's this resource tab, and you can get this checklist to make sure that you're asking the right questions and doing the right things to protect yourself. Because you just have to. I hate to say this, I wouldn't even trust my own mom, like in real estate. Like, you've got to do your part.
Yeah, you've got to do your own due diligence anytime you're going to be entering into a business agreement like that. You just have to.
Yeah.
So we're kind of running long on time here. So I'm going to ask our final question, and then we're going to figure out how to get in contact with you. But the last question is, what are your 3 pillars of wealth creation?
3 pillars of wealth creation. I think first and foremost, having the right mindset. And
Like it.
And with that mindset is being an honest person. You know, if you if you don't have that peace in place, if your intention is to build wealth by taking advantage of somebody else or just not caring, it will come. It not only does it break, you know, spiritual rules, but it will come back. So making sure that you are as pure as you can be, and that your word is truth, and that you know, look for the win-wins. I you know, that you can see that money is abundant and you don't have to, you know, like cheat anyone to get it.
Yep.
That would be first. And then second is get the education. Most of the mistakes I made were because I didn't have the education. I was trying something new, and maybe I went to a weekend workshop or something, but didn't have really the expertise. Now you might not be able to get the expertise. You want to do the deal now and you don't have that, you know, the experience. So that's where I say get a mentor, get somebody to help you who does have experience. Too many times people get advice from someone who shouldn't be given that advice. And then finally, let's see. Wow, I'm a little stumped on. Oh, I know. Be really clear what your personal values and goals are, because it's a very sexy world, should I say. It can suck you into wanting more and more and more until you don't know when to stop and your priorities are out of line. And I've met so many people who are like, finally made it. Rod Cleef is a great example. He's like, I had built this $8 million house. It was my dream house with marble, and I'm like in the pool, you know, looking at everything. And he's like, I'm so unhappy. And that's when he changed his life, because he had been investing so much in building wealth, he forgot what really mattered.
Yeah.
And so, you know, make sure you're so clear, I'm doing this for this. And don't forget about the this, because what you might find is you've got a whole lot of money, but you lost your wife and your kids and your friends along the way. You don't want that.
Yeah, absolutely. I agree. It's very easy to get distracted by the what you're doing and forget the actual mission at hand. So
Exactly.
easy.
Yeah.
Cool. Well, I appreciate you coming on the show and the time you've spent. A ton of great knowledge and great advice as well. How can our listeners get in touch with you? How can they listen to your podcast and then learn more about what you guys are doing?
Sure. The podcast is pretty much on any podcast app,
Yeah.
Stitcher, iTunes, iHeartRadio. It's realwealthshow.com. And then I also have a daily news show called Real Estate News, and that just it's like 7 minutes, and you can listen to it brushing your teeth, and it will really keep you updated on the ever-changing real estate market. It's really important.
Cool.
I have lots of agents nationwide who say that it's what's been a game changer for them. So I recommend that. And then Real Wealth Network.
What's the name of the daily?
Real Estate News.
Real Estate News.
Is the
Okay.
podcast. And then Real Wealth Network is our company, and you can join for free. And then once you join, and you have to fill out this form, it's an SEC rule, then it unlocks all these pages on our site that allows you to see some of the things that I'm not really allowed to talk about publicly.
Sure. And is there a URL that we can link to?
Yeah, realwealthnetwork.com.
Awesome. Well, Kathy, again, I appreciate you being on the show, and you have a fantastic rest of the day.
Thank you. You too.
Hey, special thanks to Kathy Fettke for joining us on the show today, and just a ton of knowledge that she's got that she was able to share with us. So 3 things that I took. First of all, surround yourself with other successful people. And then I would add in make sure they're honest and truthful. And she kind of mentioned that several times throughout the episode. So do that. Next thing is having the right mindset with honesty. So another thing with honesty. So having the right mindset, definitely a key ingredient just to getting started. Because if you don't have the right mindset to begin with, you're just going to struggle to have success. So all the other ingredients could be right, but if you have a poor mindset, you're just gonna, to me, and to Kathy, I agree with her. You're just gonna struggle. And then the next thing is, be clear about your goals. And she talked about people who achieve their goals and aren't necessarily happy because they achieved their goals, but they lost that vision. Why? That mission? What were they doing it for? And so make sure you're clear on it. And then as you go, you continue to make sure that you're actually heading in the right direction. Don't wait to have that, mission in place. Be sure you're doing that along the way. So again, appreciate Kathy for joining us on the show. If you haven't subscribed to our show, I'd love to have you subscribe. Go on to iTunes, subscribe, give us a rating and review. 5 stars would be fantastic, of course, but give us a rating and review and let us know what you think. Go on to our Facebook page, our Pillars of Wealth Creation Facebook page, and reach out to us there as well. And let us know what you think. If you've got something that you want us to talk about, or if you've got somebody who you'd like to see on the show, just let us know, who you want on the show or what kind of questions you have that maybe we can answer. I am Todd Dexheimer. Make every day a Saturday. I'm signing out. Are you ready to start investing in real estate today, but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.